Good morning and happy Monday. Namaan here, joined by my co-host Jenny Rae. Welcome to another edition of Market Outsiders. It is June 23rd. There's a lot going on both in the world and in the business world. We're excited to dive in over the next few minutes into one or two key things that you should be paying attention to as your week begins. Jenny Rae, how are you doing today?
I'm good, thanks, Namaan. It was a great weekend and lots of business insights from the weekend. Last night, I ate at a diner that has been a restaurant in Southern California since 1982 that started at the end of one of the Newport Beach piers, watched the sunset. And I couldn't help but look around and think, I'm sure a lot of these people are exposed to the markets, but nobody's checking the futures. And so it was kind of fun to be in that business, to talk with the kids about a business that lasts for over 40 years and what makes it do that. Ruby's is now a multi-location. It's really a diner that makes shakes and burgers and breakfast, and they've done a bit of branding around their red gumballs. So this is just something I wanted to kick off with this morning, is that every Ruby's that you go into, it has like this one thing, which is a giant thing of gumballs. And so if you put it's a quarter, just a quarter to get a gumball, or two. It's like one or two that come out each time. But every time you do, you get a shot at a red gumball, and a red gumball means a certificate for a free root beer float. And so my kids, I've never seen my boys do this at, like, ever in the history of our family. They brought their wallets to dinner, right? And so I thought, like, this is a good thing. As a mom, I'm liking this. And so we walk in, and no sooner have we sat down in our top level seat overlooking the ocean, beautiful spot, close to sunset. But the boys squirrel off with their stash of quarters to go and try their luck on this machine. And they came back. All three of them got a red gumball on the first try. And so I had them calculate, of course, because I'm a nerd. I had them calculate how many they would have to have gone for in order to pay the same price as the root beer float that was on the menu, which was $6.99. And so we did a little math. We had some root beer floats, but it was kind of just fun to incorporate some of the thoughts and decisions that I think help make well-rounded business people at dinner last night overlooking the ocean. I think they didn't even notice. What about you? How was your weekend?
I love that. Uh, Nothing interesting to report except for the fact that I have a dead tree in my yard that I'm trying to figure out if I can bring back to life. So if people are invested in that, then I'll keep you posted. But that was my weekend, is can I rescue this living thing or not? And if not, how do I find a more drought resistant tree that'll survive the harsh summers here in Central Texas? So I learned more about trees this weekend than I probably have in my entire life.
We did have, by the way, one more fun moment, business moment for the weekend. Um, my kiddos decided that they wanted to go to a garage sale after their swim meet on Saturday, and so we went to this garage sale. We saw just a standard poster board sign on the road. We get there, and it was a bunch of like, "Hey, we've kept this in our garage for a long time." It wasn't a sale of a home, or there were no toys involved. Um, but there was one framed print of a Claude Monet painting. And when we got in the car, one of the first things that my 12-year-old did was look up the value of a Claude Monet painting. He was kind of like, I feel like there might be something there. And he was like, Mom, that painting that they were selling for 20 bucks could have been worth $100 million. And so, um, so it was very cute that he like identified the potential for arbitrage there. But also I had to, let him know that the fact that it was printed on a piece of, paper with a with Claude Monet's name and the description at the bottom meant that it was a poster of a Claude Monet painting. But his radar was up. He was looking for opportunities. So
The,
you gotta love that.
Now the next step is negotiating it down from 20 to 2.
That's right. Yeah. Do you think he could have done that? I don't know. But it just increases the arbitrage potential, right?
Mm, I love it.
Well, what do you want to talk about in the world today? I've got a couple things, but anything you want to lead off with in the morning?
Well, I think the news that's on everybody's mind and just something for any investor or business owner to be paying attention to is just what's happening in the Strait of Hormuz right now. So the Strait of Hormuz is this narrow passage of water in between Iran and the Gulf states. A majority of the world's oil passes through that strait. It's almost like a choke point. And so one of the things that we're paying attention to just from an economic perspective, we acknowledge that there's been a lot of loss of life and that's sad and there's a lot going on in the world beyond oil. But for the purposes of this podcast, which is focused on business and markets, what we're really paying attention to are the potential for oil prices to spike. Um, you have this choke point that could be affected by any kind of conflict. You already have tankers, the news came out this morning, that are rerouting around the strait. And so that adds days and days to their journey, not just to transport oil, but to transport other goods as well. And so there's a real potential for oil prices to rise. And as we've talked about many, many times, energy and oil are a massive input cost for the global economy for almost every industry. And so when oil prices rise, prices on other goods also rise. And so it's just something to be paying attention to if you're an investor, and if you're a business person as well. So that's the big picture macroeconomic thing that I'm paying attention to.
California is no better example of that than anywhere in the world, Naman. We have some of the most expensive oil. And one thing that if I were in the administration right now, I would look to is more opportunities for domestic production that have actually been hampered by local legislation. And California is a great example of that. So you're going to see, I think, not just a temporary change, but you're going to see some permanent rebalancing. Whenever you have a global economic event like what happened with the strikes in Iran this weekend, it's not just economic, it's geopolitical, but it has these economic implications. I think one of the second and third order effects that great investors start to think about is where is the future going to be for something like this? And I think domestic oil production, increasing it is going to be wild. I've followed both farming and oil production for the last 4 years. And I'm noticing if you like these, they're not things that are publicly traded necessarily. California oil production is not necessarily owned by a lot of the big global majors. Neither are a lot of the farms. They're not publicly traded, but they have real impacts in terms of the interaction of regulation and an opportunity for the demand that's inside the market. And I think that we have the opportunity to bring those two back closer together. So I'm going to watch for some of these second and third order effects, not just the headlines over the next couple of weeks. And I think there's opportunity to provide consistently low oil prices, but you're going to have to change not just where the oil goes, but actually the production sites as well.
It'll be interesting to see. I'm going to take the other side of that because the U.S. is already the largest producer of oil in the world, and so I don't know how much more room we have to grow. So that's really the question. It's not like how do we shift production back? We've actually over the last 20 years become energy independent. It's can we can we make up for whatever supply is being lost elsewhere in the market? And I think OPEC and OPEC Plus are going to have something to say about that as well because they're not interested in losing further share. And so yes, there are going to be second or third order effects, but what I've noticed is usually, capital flows and decision-making flows to the point of like least resistance. And I think the point of least resistance here is not going to be like adding domestic manufacturing capacity. It's just going to be, hey, Saudi Arabia, can you make up this gap in the market? Like, do you have another million barrels a day that you can flood the market with? And I think OPEC's going to be happy to do that. So I think in an ideal world, what you're saying would happen. I don't know if I believe it's actually going to happen coming out of this
Not in the
situation.
short term, not in the short term. But I do think that there are sometimes geopolitical catalysts that change the opportunity for that. And California has as much oil as Texas does, but doesn't actually utilize it. And so if we continue to to become not just energy independent, but a net exporter of energy, it would change the game in the long term. But yeah, you don't switch on these kinds of changes overnight, and it would be another toe to toe between Gavin Newsom and Donald Trump. I personally am for that because I think that the long term effects are valuable, but I also think that there are a lot of things that have to happen. So if I was in, thinking about markets today, you're never going to see that kind of impact, but I think it's valuable when we think about those kinds of things in the future. So, Noana, do you want to talk a little bit about any confusion that people might have about the difference between oil production in Iran and then this oil transport. I think that's a really important highlight because I think that a lot of the news is talking about the fact that they feel like oil prices will spike, but not necessarily the exact reason for it. What do a couple of days in terms of oil transport mean for oil prices? How
Yeah.
material do you think these changes will
I
be?
think it's a really good question. So, Iran, in terms of oil production, is not a major player. Iran is the most sanctioned country on the face of the earth, and so, like they produce, around a couple million barrels of oil a day. It's a drop in the bucket, compared to what the global demand is, and 90% of that heavily sanctioned oil is moved on the black market, and from kind of third-party sources who track this stuff say it ends up in China. And so, it's a relatively small amount of oil. It is mostly sold on the black market and it mostly ends up in one market. And so, as a producer, Iran is a footnote. Why this matters to the global economy and why we're talking about this is because the Strait of Hormuz is where a lot of the oil coming from the Gulf states and coming from the Middle East is like transported in and out of. And so, what Iran has the ability to do potentially is disrupt shipping in that narrow passageway. And so, they have patrol boats, they have the potential to lay down mines, they have the potential to, maybe even take ships hostage, right? That's happened in the past. And so that is the reason that you could see oil prices spike if they choose to respond to this geopolitical situation by trying to inflict economic pain on the rest of the world. The way that they would do it is by disrupting shipping in that strait because they know that, right, liquid gold, oil, is what's transported through that strait. And so, kind of one of the things that you see economists and geopolitical strategists gaming out is that something that's going to happen? And if it does happen, how do we mitigate that risk? How do we respond? And we don't have the time to get into kind of what we would do if, in that situation if we were in those seats. But what we do want to do is just bring attention to the fact that this is something that could happen. And so if it happens, you're not surprised by the fact that oil prices might go up. Well, I'll pause there. I'll get your reaction to that. And I just wanted to mention one other thing that I thought was really interesting.
No, I mean, I think that we've from day one talked about how energy is one of the most important inputs in any economy. And actually, if you look at macroeconomics over the last 1 to 2 decades, one of the biggest gap wideners of affluent economies has been its energy prices. And so those that have managed them down, like the US, have gained a wealth gap to those that have not. And so a lot of people talk about central banks and inflation and productive economies, and those matter. But honestly, if there's one lever that you're trying to pull, it's energy prices. And so that's why it matters both to us and to the world. And so I just want to re-emphasize the fact that this is not just because there's news. This is actually a core fundamental input that we're always looking at.
Yeah.
Back to you, Naman.
Yeah. Well, the last thing I just wanted to mention is just one of my rules for life when I'm trying to figure out what's happening is follow the money. And so what's been really interesting to me to watch over the last week to 2 weeks is the Israeli stock market. So there's an exchange of about 150 stocks in Tel Aviv. The market has been up and to the right in Israel since the conflict began. And so I've been trying to figure out like what are traders and investors in Israel or folks who are investing in the Israeli economy seeing that I'm not, because I would have expected the opposite. I would have expected the markets to, be in some kind of correction. And so the reason I'm bringing this up now is because what I don't want people to think as they're investing is, well, this just means that the markets are going to tank, right? Like if oil prices spike, we're automatically in for a recession or we're automatically in for a bear market. Those are different things, by the way. But what I just wanted to call attention to is the fact that you have this case study here of a small stock market that's overly exposed to conflict. And for some reason, it's been up and to the right in the last 2 weeks. And so obviously, Israel's had the upper hand in the conflict. I think that helps. But still, you have daily life that are being disrupted. You have people having to go to bomb shelters multiple times a day. You have people, not able to, you know, go to work and, produce, at the same level that they were able to produce prior to the conflict. And yet the markets are up and to the right. And so I don't have an answer for it, but it's something that I thought was interesting and something that I'll be watching to see if that changes because I think automatically people just they default to thinking, okay, this just means bad news for markets. And I think what you're seeing in Israel is a decoupling between what markets are doing and what's happening geopolitically. And I think we've been seeing the same thing in the US over the last 5 to 10 years. Like events in the rest of the world affect the markets less than they ever have before. And a big reason why is because we are now energy independent and because we have become a net exporter of oil. And so like it gets it captures the headlines, it captures the attention. When people think Middle East, they think oil. But I think markets are starting to see past that. And what's interesting to me is that even Israeli markets are seeing past that. And so if you have a perspective on why, I'd love to hear it, because I've got lots of questions and not a whole lot of answers when it comes to what's happening over there.
I would just love to know who's in the mix. From what I understand, having spent a little bit of time in Israel and in the Tel Aviv business community specifically, there's a significant amount of cybersecurity companies that are there. So one of the questions is, how powerful do we think the cyber war is in events like this? Are there other kind of second and third order effects that we're not thinking about? If you imagine what the mix of those companies are, then that is what would matter more to me. Is kind of where are they, why are they positioned in this way specifically, and also who are the investors in those markets, right? So if you don't have Israeli investors, but you have other investors that are thinking about different impacts related to the mix of what they're doing, then that same thing, no answers, but the questions that we start to ask, I think, become super important. This is one of the things that we're seeing in the height of recruiting season for consulting right now, Naman, is that a lot of the consulting firms are saying we actually care a lot less about your answers inside case interview. We care a lot about the questions that you ask. The questions are not something that ChatGPT can formulate for you. And if you lose your ability to ask questions, you become, you lack value to us. And so I think that is the right thing and the right place to start, is in a place of humility. And I think when you ask those questions now, the next time you see those dots connected across other macro events or other markets, you see a big change.
Yeah.
So, well, there's not a lot that happens on a Monday morning because the markets aren't open and businesses are not reporting, but we will have more on that as we go through the week. However, this was a really big weekend, important for you to tease out what's happening. And it's also really important and valuable to have a political, non-political view for these kinds of economic things, where you understand what's happening in politics, but where you don't take a political opinion on it. And so I hope that this was helpful for you this morning. Thank you, Naman, for joining me for the conversation. We'll